Welcome to Wealth Creation Investing. I'm Matthew Buckley, the Chief Strategist here at WCI, and I just wanted to kind of give us a midweek update as to what's going on, because many retail traders, simply their neck hurts right now, being whipsawed around in this market, not knowing which way is up. So I wanted to take some time briefly to knock out a midweek update in addition to our Monday market outlook and our Friday debriefs, just to kind of to give your gyroscopes time to get back together and really understand what's fundamentally going on in the market. Remember, folks, you can open a free paper trading account, a virtual account at our strategic partner, TradeMonster. You can go to trademonster.com/WCI and open a free paper trading account and take a look at all the tools that we're going to look at right now. So what's going on in the market? Obviously, let's just take a look at the SPX, which is the S&P 500 index. And let's take a look at the past, let's just say 10 days, because we had good employment numbers come out of ADP. Then we had bad numbers come out of the government. Let me get rid of these drawings here. So last week, some good jobs numbers out of ADP. We saw a little bit of a rise. Then we had some issues with Spain bond issues, unemployment from the government coming out. And obviously, there's a Friday missing because Good Friday was closed. And we had really bad, for the past 3 months, we've had job creation of north of 200,000 jobs, and the payrolls came out on Good Friday at $120, 120,000. So obviously on Monday, the market gapped down, and then the market has just been in a tail slide since this time. Outside of the bottom range of what these are called Keltner channels. So guess what? We're seeing a little bit of what we call a relief rally today. As of right now, we're up about 102 points on the Dow. The SPX is up, about 11, and the NASDAQ is up about 13 there. So, and the Russell's looking pretty good as well. So this is what we call a relief rally. So if this is to be sustained, we're going to need Thursday and Friday to not be red. We're going to need to see a continuation to the upside here. And 1360 is, a kind of a psychological point. We were trading above the all-important psychological 1400 point, and as soon as we broke that last Wednesday, that's when all the doomsayers, and they were skidding along the bottom here, were predicting cats and dogs living together in mass hysteria. So that hasn't happened. Yesterday or this morning, I think enough smart money came in and said, you know what, there's a lot of stuff that's pretty cheap right now, and it's time to get in the market because it is oversold. Now remember, folks, this market is being guided skyward by the not so invisible hand of the Fed. There's 3 months of the S&P. Let's take a look at 6 months. Just an absolute, escalator to the upside. Yeah, a little pullback in the fall for some various European issues and some other stuff. But this line, the way it looks like this, is because of the Fed buying treasuries, buying some debt, pumping liquidity into the market. So let's take a look at options traders, our barometer, our altimeter of what's going on with volatility. Now, obviously, volatility, with that, it has an inverse relationship to what we just saw in the SPX. This has been on an escalator down, right? Volatility hasn't been this cheap in literally years, folks. But obviously, recently, now let's close this one down to a 10-day chart. And let me delete some of those drawings here. Volatility had the inverse relationship to what was going on in that SPX, right? As the market was tanking, what did volatility do? Volatility climbed, and we had a big spike yesterday, and obviously we're seeing what? A gap movement down today. So the VIX, the CBO Market Volatility Index, is actually down 2.5%. Not a ton, because it was up about 11% the other day, which is a huge move out of the VIX. But again, folks, volatility is super cheap right now, and you're going to hear us beat the table and beat the drums here at WCI. When vol is cheap, you buy it, and when it's expensive, you sell it. And vol is still cheap right now. So we'd be about right now. We have a position in one of our partner companies, Top Gun Options, a position called a diagonal, which is long-term bullish on volatility, meaning out in January 13, we think between now and January 13, something's got to give. Volatility cannot stay this cheap forever, but we're bearish, like you can see, in the front month. So we sold the front month, April 20 calls, and we saw north of 20 yesterday out of the VXX, which is kind of a proxy for the VIX, because the VIX, we'll have an education session on the difference between the VIX and the VXX and some of its other derivative products. But this is a great trade to be long-term bullish on volatility, but short-term bearish, because like we talked about, folks, looking at the chart here, even with people thinking the world was going to end, it didn't. And we're seeing a little bit of volatility petering out as the market kind of finds its legs and recovers. Like we said, though, we need to see in the SPX and the Dow and some of the major indices, we need to see some follow through to the upside, not just getting back to kind of the new normal that we saw for the past 5 days after bleeding red, but a continuation of this upward climbs. Alcoa coming out with earnings last night after the close and blowing the doors off of it certainly helps. So in the middle of earnings season, we actually have some financials coming out with earnings, JP Morgan and Morgan Stanley, I believe, on Friday. And like we talked about at Top Gun Options, financials tend to lead us historically out of a recession. So if we see good news in the financials and they had a good first quarter, I think this run continues. If not, all bets are off. So make sure you have a portfolio that's hedged, kind of looks like a Christmas tree. You got some green, some light green, and some red, and we'll cover all that stuff going forward in some future WCI videos. So a quick midweek update from your chief strategist here at Wealth Creation Investing. Make sure you check out Hubert's videos that came out as well today, because that guy's got an interesting take on the market as well. So Matt Buckley, chief strategist here at WCI. Have a great week, and I'll see you on Friday's debrief.